Every year, $1 trillion is lost to bribery and corruption globally. Not stolen in one place, not by one person, spread across government contracts, public institutions, quietly, systematically, technically, and almost always through the financial system. Welcome back. I'm Majid, and this is Financial Crime Awareness Hub. Today, the topic that we're going to cover is, as I promised, is the bribery and corruption, what it looks like and how it moves through banks and other financial institutions, and exactly what the CAMS exam expects you to do about it. So let's dive into it, and I'll walk you through whatever possible scenarios that I could cover within this video. So before I define anything, a scenario, let's discuss. So, and I want you to read it carefully because every element in it is deliberate. Let's say it's like a multinational company. They've won a contract, government contract, in a high-risk jurisdictions. So shortly before the award, it pays USD 3 million in consultancy fees to a local agent. The agent has, no visible staff, no office, and no agent. The agent, again, the consultancy fees that they have received, it's 10 times the market rate. So 6 months later, investigators find that the agent transferred funds directly to a bank account linked to the government official who was awarded with this contract. Okay, let's go through it. There are 3 things that there are, red flags. Okay, so is this a criminal offense even if the company never met the officials directly? Where did the bank fail and at which point? And what the compliance red flags that should have been caught before any of this happened? Okay, so that's the bribery through a third party intermediary. The company never handed cash to the government ministers, right? It paid the consultant who is actually intermediary. So consultant paid then to the minister. So it's like it's creating a a structure and it distancing two parties. Okay, so that's where it becomes deniability is easier here, that I have no connection with that. And it's the single most common bribery pattern that we see globally, and people or the enforcement agencies are really suffering with that. Let's now look at another real case that had happened in the past. Let's see, it was from Siemens, right? We'll see that in the next slide. All right, so this is the case about Siemens, okay, is the reference point for corporate bribery globally. And I want to walk you through it because it makes every concept in this video concrete and clear. So between 2001 and 2007, Siemens, one of the Germany's most respected engineering companies, paid approximately in total euro 1.4 billion in bribes across multiple countries: Greece, Nigeria, Argentina, Bangladesh, Russia. So this is actually what happened in telecom contracts, power infrastructure, healthcare, transportation. How did they pay? Through the network of consultants, agents, and shell companies in offshore jurisdictions. So the bribe payments were recorded in Siemens books as a just to show legitimate consultancy, okay, which is in their business model. It's very common. So 2 sets of records, one for the auditors, one for the actual transactions. In 2008, Siemens paid in total 1.6 billion in combined fines to US and German authorities. I have put a link in this slide, as well as I'll put it in when I'll publish this video. I'll put it in the comments as well. So if you wanted to browse through it and you wanted to understand more details, feel free to do so. So it was the largest corporate bribery settlement in history at that time. The US prosecution was brought under the Foreign Corrupt Practices Act, even though Siemens is a German company. Because the payment touched down the US financial system, that's where FCPA jurisdictions applied. Okay, the thing is that, and here's the compliance failure that actually sits underneath all of it. Multiple banks process those consultancy fees payments year after year without identifying the pattern inflated fees or third-party agents, jurisdictions with no criminal, no commercial, connections to the contracts. The red flags were there. They were not caught. It's just simply, I would say, a straight failure. Let's look into more details like what now bribery is and corruptions and their definitions. Let me give you the 4 definitions the exam actually tests you on. It should be crystal clear with you and without any unnecessary complication. The first thing is the bribery. So either you offer, promise, giving, accepting or soliciting something of value to influence the actions of a person in a position of trust. Okay, usually a public official, but the private sector version also applies to also here. Okay, and here's the exam point that catches candidates out. The bribe does not have to be in cash. It could be a gift, hospitality, travel, a job offer to a family member, anything of value. If it is given to influence a decision, it's a bribe. So sometimes in our financial institutions we have a gift policy. Sometimes like anything above $100 or $150, you have to report it to compliance. So that is the reason these policies are in place, because anytime any of your officers or any of your even frontline customer service officers, when they receive a loan application, and if the customer is providing them, let's say, a pen or something as a gift, they need to be aware of this, what they have to do, what should be their action, whether to report it or they have to comply with their gift policies. Okay, let's look at now the next definition is the corruption. What it is. So it's a broader category. Corruption is the abuse of entrusted power for private gain again. Bribery is one form of corruption. Embezzlement, nepotism, extortion, and abuse of discretion are others. Every act of bribery is corruption, but not every act of corruption, I would say, is bribery. Okay. Let's look at third thing, which is the facilitation payments. What it is, it's small payments to low-level officials to expedite routine government functions, also called grease payments. Okay, this is where the UK and US frameworks diverge. The CAMPS exam tests this distinction specifically. The UK Bribery Act 2010 prohibits facilitation payments with no exceptions. The US FCPA permits them in limited circumstances but strongly discourages them. If your institution operates under UK law, facilitation payments are always illegal, full stop. Okay, sometimes I'll give you an example. In our organization, when you have the procurement contracts or something, so those who are moving the tender documents inside, so the companies, they sometimes also offer these small clerks and all, either to tell them like the quotations that the company is receiving for the contracts. Okay, so they also pay them sometimes. Okay, this is one of the example I can think of for now. Let's look at the fourth thing, which is the kickbacks. So it's a specific form of bribery where a portion of the contract value is returned to the person who awarded it. Okay, remember that. The scenario I described on the previous slides, it's a consultancy fees paid to an agent who then transferred money to the official who awarded the contract. That is a kickback structure. It is most common corruption pattern in the public procurement globally. Let's look at some of the red flags in the next slide. So there are 8 red flags I wanted to bring it into your attention, and these are the flags that you have to see it in the exam questions and the scenarios that the exam is going to test you on. Okay, the first one is inflated or unjustified consultancy fees paid to a third-party agent. A consultant paid 10 times the market rate with no clear deliverable. The overpayment is a bribe. The consultant is the conduit. This is the same which we saw in the Siemens structure. Second, third-party agents with no visible business activity, no staff, no office, no track record, no company, clarity, no clear expertise in the relevant domain to the contracts they are supposedly advising on. Okay. Third, the payments to the agents in offshore or high-risk jurisdictions with no commercial connection to the underlying transactions. Excuse me. If the contract is in Nigeria and the consultancy fees goes to Shell company in a BVI or British Virgin Island, that routing has no legitimate commercial explanations. Okay. Fourth thing is the contract awarded without competitive tenders. Government contracts is in high-risk jurisdictions, okay, are awarded to a company, let's say, without a transparent bidding process, particularly when that company had no prior presence in the market. Let's look at the fifth one: payments made, immediately before or after a contract award. Timing really matters here. A large consulting payment to a new entity within weeks of a contract award is not a coincidence. It's a red flag or a signal, I would say. Okay. Sixth one is the customer is a PEP or is connected to one. PEP carry elevated corruption risk by definition. So that's the reason, in our CAMS exam or nowadays any financial crime exam, we have to, identify their connections, or even in your account opening application forms, sometimes you have to declare whether you have any previous government, connection, or were you working in previously in any of the government organization, or any of your relatives are PEP. That's the reason, because they wanted to know during your KYC whether there is a potential chances of having, corruption payments. Okay. So the next thing is the source of wealth, okay, which is source of wealth if it is inconsistent with the customer's official salary or known business activity. Government officials with USD 50,000 annual salary who owns multiple properties and luxury vehicles has unexplained wealth. That is corruption indicator. The last, reluctance to provide documentation on business relationship or transaction rationals. A customer who cannot or will not explain the commercial purpose of a payment is trying to conceal something. That's what one of the red flags you have to be careful of. Let's look at what FATF actually says all about this bribery and corruption in our next slide. All right, so let's now discuss that why compliance professionals sometimes get wrong. Why they sometimes ask, why is the bribery and corruption an AML issue? Surely, that is a legal or ethics problem. The answer is in FATF recommendation 3. It requires every country to criminalize money laundering in connection with all serious crimes, including the 21 designated categories of predicate offence. Corruption and bribery is explicitly on that list. Which means that the moment corrupt officials receives a bribe and moves those funds through the financial system, it is not just a bribery case, it is simultaneously a money laundering case as well. And that is where AML teams comes in. Let me take you through the 4 implications on this slide. So you remember the example that I gave you for the PEP is also one of the things that we're going to discuss here as well. So AML due diligence, applies to every payment that could be a potential bribe. The bank which process an inflated consultancy fee to a third-party agent does not get to say it didn't know that. If the red flags were there and were not acted on, that institution has an AML failure on its hand, regardless of whether it knew about the corruption underneath. So for customers now operating in the high-risk jurisdictions, and the corruption perception index published annually by Transparency International is practical source here. So enhanced due diligence is required in such cases. Source of funds verification is not an optional choice here. You need to understand where the money laundering where the money came from, and where it is consistent, whether it is consistent with the customer's legitimate business activity. Okay. The next thing, the entire PEP framework is an anti-corruption framework. Okay, that's why as I said in our account opening, they sometimes ask these questions. So senior management approval is required. Source of wealth verification, enhanced ongoing monitoring on PEP cases. These are not bureaucratic requirements. They exist specifically because public officials in positions of power are the primary corruption risk category, and former PAPs retain that elevated risk. The network and the relationships that made someone a corruption risk do not disappear the day they leave the office. Okay, so sometimes even if they leave, they may have any upcoming payments or any potential connections that they may use, and they get the bribes just to get things done. The last is the Merida Convention. The UN Convention Against Corruption, signed in 2003, is an international legal foundation. It was the first global treaty specifically targeting corruption. It requires countries to criminalize bribery, embezzlement, trading in influence, and the laundering of corrupt funds. The FATF Recommendation 3 and the Merida Convention sit alongside each other, both pointing to the same obligation. I'll go now to the next slide, where I'll put a question for you. You will read the question. I'll read it out loud for you. You take 30 seconds break, pause the video, put your answer in the comment, and in the next slide I'll reveal the answer and justify what is the reason this answer is correct. Let's move on to the next slide. So now let's look at the question. A bank located in New York has identified suspicious transactions at a correspondent bank in China for one of the international customers. The correspondent bank is not following agreed upon protocols. Which factors indicate that the bank should terminate the relationship? Option A, the correspondent bank has opened branches in a country on the OFAC list. The compliance officer at the correspondent bank is currently being investigated due to bribery allegations. The correspondent bank has recently exceeded acceptable limits in the primary bank's recently developed risk model. Option D, the primary institution has requested transactional details from the correspondent bank to aid in their investigation. I would request if you can pause the video here for a couple of seconds and then understand or digest the question. Put your comment with the option A, B, C, or D. Okay, and then I'm going to reveal the answer in the next slide, and after that I'll explain why that particular option is right. Okay, let's move on to the next slide and see the answer. So the right answer is option number C. Okay, and I want to explain why, because this question is testing something more nuanced than it first appears. Let's read the scenario again carefully. The question actually is asking or telling you the New York bank has already identified suspicious transactions. The correspondent bank is already not followed agreed protocols. These are the conditions that exist before you get to the answer options. Okay, in this context, exceeding the limit of the primary bank's own risk model is a formal, documented, quantified justification for termination. The risk model was specifically designed by the New York bank to determine at what point a correspondent banking relationship is no longer acceptable. The correspondent bank has now crossed that line itself even, and on top of it, it combined with the suspicious transactions and protocol failures. So that gives the primary bank everything it needs to exit the relationship compliantly and defensibly. The word defensibly matters, and to be noted here. Okay, terminating a correspondent relationship has, legal and commercial implication and consequences. The decision, must be documented, and then the risk model actually provides that documentation itself. In whatever business we do in compliance or in any of the financial institution, everything must be documented. Like, we say for the STRs, either you file it or you don't file it. Even if you don't file it, you have to ensure that your documentation is accurate, and it must be kept in records in case if you are being audited by the regulators. Let's see why other options are wrong. Option A, opening branches in a OFAC listed country is serious, right? But it triggers enhanced due diligence and escalation, not automatic termination. Branches can exist in high-risk jurisdictions, right, under license and appropriate controls. This is a flag for deeper investigation, but it's not a ground for walking away without more information. Option B, and this is one of that catches most candidates. A bribery investigations against a compliance officer, sounds like the almost alarming option, but in practice it is genuinely concerning. But allegations are not a proven finding. The investigation is ongoing. Okay, terminating a correspondent relationship on the basis of unproven allegations could expose the New York bank to legal challenges. Okay, the correct response to allegations is the enhanced monitoring, escalation to senior management, and close tracking of the investigation outcome. So not immediate termination. Option D, as in like requesting transactional details, is what you do during an investigation. It is a step in the process. If it is not in a way the reason to terminate the relationship. Okay, so finding what those details reveal might give you grounds, but the act of asking does not. Okay, let's look at some of the exam's rules in the next slide. So the exam rule and what you need to remember: termination of correspondent relationship must be supported by documented risk assessment, not just simply red flags. There are 4 things which you can take away from this video. First is bribery. Bribery uses intermediaries. The company rarely pays the officials directly. Inflated consultancy fees to third-party agents linked to officials is the textbook bribery structure, and the Siemens case that we discussed in our previous slide is the most documented example in the history. Second, corruption is a FATF predicate offence. You need to make sure that you remember this. It is one of from the 21 predicate offences. Laundering those corrupt proceeds is also money laundering, and AML obligations apply to every institution that touches those funds, whether it knew about the corruption or not. Third thing, PEP and the corruptions are inseparable. Okay, the entire PEP enhanced due diligence framework exists because public officials are the primary corruption risk category. Source of wealth verifications is very important and one of the anti-corruption control, and it's not simply just a KYC exercise. The fourth item, terminations or any termination decisions must be defensible. Risk model breach combined with the suspicious activity and protocol failures creates the documented case. So allegations alone do not do anything. So you have to make sure in our compliance domain there must be something concrete. You cannot simply rely on allegations. So one without the other is not enough. And then last but not the least, as I always request, in case if Advice Cube is helping you, I just wanted to bring it to your attention that we have created extensive amount of questions that clarify all those concepts that we have been discussing, or we will be even discussing about all the 4 domains, and there are 1500 plus questions which will definitely help you to pass the exam. And in the past 4 years roughly, I have around 200 plus candidates, those who successfully passed. There's definitely a methodology such as practicing those questions, reading the concise notes that we have prepared for all those working professionals. I can understand that people, they have very less time, so they cannot sometimes read the entire study guide. So the notes which are crisp, firm, clear, to the point, they can convey the message so that you understand easily. On top of it, we have also developed an e-learning course. So as you go, you maybe driving, or you may be in a metro somewhere, you can listen to the course that is an e-learning course. And the beauty of it that we have trained that course, we have trained the bot within that on particularly CAMS material. What happens is that in case if you have a question that you wanted to ask, you are in a training, you want to, let's say, ask the trainer, but here there's no trainer. So what you do, so directly ask the question from the bot, and it will explain you all the concept that is around your question. So there is no boundaries, no time zone restrictions. You can ask the question, you will get the answer immediately. It's not unlike ChatGPT, it's a random answer, but here you will get a specific answer because the bot itself is trained on the CAMS financial crime material itself. Last but not the least, bribery and corruption section is done. Thank you so much again for giving me the opportunity and time to listen. Do if you wanted to drop comments, if you have any questions about the question that we have seen. In the next video, we're going to discuss tax evasion and tax avoidance. These are the two terms that sound similar but are legally completely different. So tax avoidance is legal, tax evasion is a criminal offense, and under FATF, FATF it's a predicate offense for money laundering. Knowing the difference and knowing how to recognize tax evasions in a financial crime context is something the exam tests you on repeatedly, I would say. So subscribe the channel and wait for the coming videos, and I would request if you can press the bell icon so that any new videos I'm gonna publish, you will receive the notification. And I would love to hear any feedback that you may have to improve my videos. Thank you so much for your time and watching this, and I'll see you in the next video.